Hello traders and welcome to another video review. Today is Friday, December 23rd, 2022. Let's find out what is going on the Forex calendar in the last day before Christmas. So let's start with core durable goods orders data from US scheduled for release 2:30. The market participants expect a drop from 0.5% to 0.1%. The next data scheduled at the same time 2:30 are from the Canada in form of the GDP, gross domestic product. For the month of October, it's supposed to stay at the same level of 0.1%. And the last data for today, last very important data for today, new home sales from the US scheduled for release at 4 o'clock. And we have a drop here as well from 632,000 to 600,000. That's the forecast of the new home sales in the US for the month of November. So not that much busy calendar. Well, we are just before the Christmas, so don't expect too much volatility on the markets basically. Nevertheless, we can still have a technical analysis of some of the US dollar related pairs, and we are going to start with US dollar to the Canadian dollar and then something else. So let's start with US dollar to the Canadian dollar. So there you go. This is 4-hour chart of the US dollar to the Canadian dollar, and as you can see, this market is already in the Christmas mode. The technical resistance located at 1.3698 has been tested many times, but never been really violated. Technical support 1.3518. As you can see, didn't hit since 14th of December. The market still respects the 100 periods moving average. As you can see here, it starts to bouncing from this technical indicator. So if you see a kind of a nice breakout to the downside, it means that the next target for bears is of course 1.3518. And then maybe this drop might extend towards the level of 1.3383. Nonetheless, the situation is, as you can see, very tight. The market moves in a very limited range ahead of the Christmas, so don't expect any big move today or just after the Christmas period. So we are locked inside of this zone. We are bouncing from the 100 periods moving average. Technical resistance present, technical support present. Momentum is, sometimes it's above the level of 50, sometimes it's below the level of 50. Right now it's testing the level of 48 points. So nothing is going on this market. Nothing serious is going on this market just yet. US dollar to the Canadian dollar. Let's find out what is US dollar to the Japanese yen doing then. US dollar to the Japanese yen, as you can see, keeps moving lower and lower because of just recently, since the local high in the Bank of Japan intervention at 151.96, we keep making lower lows and lower highs. Definition of the down trend. We are as well below the 100 periods of the moving average of the 4-hour chart. So just recently we made another big spike to the downside. The technical support made by the swing low is located at 130.59. That's the technical support for the US dollar to the Japanese yen. The local technical resistance might be considered this low from the December 2nd, located at 133.63. So pretty much this market is again locked between those two levels. If we zoom in just a little bit closer, we can see that the market is trying to move higher. Nonetheless, this is typical low volatility upward correction, upward pullback. So nothing good would come from this. As you can see, the market respects this kind of a line here. The local trend line, nevertheless, it's still looks like we are making some kind of a wedge, some kind of a rising wedge. So the outlook for this situation basically is to the downside. So we should see the market moving towards the recent local low and swing low located at 130.59, as long as we trade below this technical resistance. So the outlook remains bearish. Momentum is weak. 43 points is below the level of 50. Let me just put the level of 50 for you guys. There you go. 50 is somewhere here. So we are still below the level of 50. Plenty of ground to be covered ahead of the level of 50. So bears are in charge of the market. This is typically typical pullback, corrective pullback. We should wait for another downside movement soon. And just recently we got this movement on the S&P 500, and please take a look at this. Let me just switch to daily this time. Daily. There you go. The daily is showing us as per candlestick patterns. As you can see here, we got this high at the level of this is 4,136, yeah, and then of course big pin bar here, resulting in a kind of a downside movement below 100 days moving average, which is always not really good. We have this local technical right now it's resistance, of course, so we should expect this market to test this level 3,917. It's just in the level of the 100 days moving average. And there is one more thing I would like to show you is, of course, the trend line. The trend line had been violated brutally. As you can see here, we got the breakout after the pin bar was done. So right now we should be moving lower. The next target is, of course, located around here. This is the technical support, 3,696. So that's the next target for the bears. The outlook is bearish, momentum is weak. So please consider the fact that before the end of the year we should be even testing the local swing lows located at 3,490. This is the technical support, and it might be tested really soon. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.